Hello, everyone, and welcome back to Money with Kazeem. Thank you so much for joining me back in another video. In today's video, I'm going to be taking you through a major shift that I have made in my personal investing strategy, specifically how I organize my emergency savings. For some of you that have been with me for a very long time, you may know that a lot of my emergency saving was kept in Cash ETF, HISA, like a lot of high yield, high interest savings ETFs for a very long time. For me, that strategy was one that's effective, right? It worked in the sense that it allows me to maintain some level of safety, if you will, and some level of comfort. However, as we've seen in the recent time, the world of interest rates and yield on many of those products have significantly dwindled. And I began to start to ask myself a few questions about my investment strategies and what I ultimately want to gain from my approach to investing and saving for a very long time. While a lot of my long term emergency savings, are geared towards things like saving for my emergency house savings, emergency grocery funds. You would note that many of those things haven't been something I've had to use in the recent times. And of course, none of this information I'll be providing in today's video is financial advice. I am in no way a financial advisor, and I'm just merely sharing with you my own strategy, my own approach towards investing and walking through this world of financial investment. So let's just get straight to it. Why did I decide to make this change? For a long time, I've kept most of my emergency savings in Wealthsimple Cash or Cash ETF, as I said earlier. Even though that's safe, it honestly wasn't doing much for me, right? A lot of people have, for a very long time, advised me that I probably shouldn't keep such large amount of money in things like Cash ETF or things like HISA. While at the time, as I was saying earlier, it made me feel safe and felt like, should anything come up, I would have access to that money within a reasonable amount of time, which made me feel comfortable. Right. However, as time have gone on, I've realized that yes, it does provide some level of safety, but also offers significant drawbacks in terms of appreciation on those money. One of the first ones that I would like to draw your attention to is my Cash ETF. The money that I was initially investing in Cash ETF was now invested in VDY. Anybody that knows VDY knows that that's Vanguard Dividend ETF, one that's very common in Canada. That now holds my long-term emergency savings fund. CDs Z, that's another dividend fund, now owes my property tax. CSAV, that one you will be familiar with because that didn't really change much. However, in terms of what it does do, it owes my emergency grocery fund, so that never really changed. PLZ.UN, that now owes my business savings. VEQT, it continues to hold my vacation fund. XEI continues to hold. This one's a major shift. This used to hold HISA, but now I hold XEI. XEI is another major dividend ETFs in Canada that we have available to us. That now holds my emergency housing savings. And of course, I will be showing you and taking you through this as I go along, showing you what it actually looks like in my TFSA and my accounts. XEQT holds my long-term emergency savings fund. XGROW holds my emergency grocery fund. ZAG holds my 1 month emergency savings. ZDV holds my short-term condo repair funds. ZEQT holds my 1 month emergency savings. And ZGROW holds my emergency housing savings. So as you can see, a lot of the money that was initially kept in my Wealthsimple account are now in my TFSA As I found that those are much, much better options for getting the effective kind of yield that I'm ultimately trying to grow that account to. Now, let's log into my Wealthsimple and I can take you through sort of what the account actually looks like. If you bear with me, hopefully we can get in. Shoot. That's why there's a problem. Yes. As I try and log into this portal, I'm curious what's been something that you guys have been engaging in. What are some of the changes that's been happening in your portfolio? What are some of the strategies that you've been employing as we've seen the ups and down in the market cycle for the last I want to say 2 weeks now, right? We've kind of seen the market go up rapidly. We've seen it come down. I'm curious what you're doing with that. Are you continuing to invest, or are you making some significant changes in your investment approaches during this time? I'm curious. I want to know. All right. Now I have my Wealthsimple account. Oh, I can't see myself. I hope you guys can still see me. For some weird reason, there's an issue with picture in picture. Okay, now I see myself again. Yeah, if you've seen my portfolio in the past, you'll see that this account is significantly down. I will tell you sort of the rationale behind why this account is significantly down. You'll see now that if you look at my checking account, there's only 1,941, whereas previously there used to be well over $10,000 in this account. That is because the money I was speaking about earlier was withdrawn from this checking account and now lives here. Okay, the first one, CDZ, is the iShare Canadian Dividends ETF. You'll see that overall that is currently sitting at 40.008 right now as of today. Now odds, you can see that this is where it sits right now. I now have about 1,111.52 here. You'll see that I'm a little bit up, right? Even though I recently invested in this ETF, I'm slightly up. I'm up about $8, which is something, right? You have to start from somewhere. And of course, I'm expecting a dividend for this as well, right? At the end of the month, the dividend that is paid out for this product is going to be reinvested back into it to continue to grow it. CSAV, again, that never really changed. It's still, the dividends is given out at the end of the month and reinvested back into here. And as it stands, I'm currently sitting at 3,880 and some change. PLZ.UN, that is currently one of my worst performing ETF today. And the REITs sector has been going through massive challenges in recent times. And this particular ETF, this particular REIT has been doing for a very long time. I still continue to expect it to continue to do well. Has been doing very exceptionally well for the very last couple of years. However, they're facing a little bit of a cash challenges in their businesses right now, making it more difficult for them to be able to see the kind of returns. Most likely, they're going to have to cut dividends. That's what I'm expecting, is that this REITs would need to cut the dividend that they pay out on a month-to-month basis, because at the moment it just doesn't seem sustainable. So this is one that I would be keeping a major eye on to see sort of what they do in the coming months. VDY, you'll see that this used to hold my Cash ETF, and previously it was sitting at over 11,000, just shy of 11,000 something. Now it's sitting at $12,000. Um, you'll see that I'm up roughly 328.89 on this one. This is one of my rationale for moving that from cash and to investing it in VDY. VDY is a relatively stable ETF and provides steady dividends, provide modest growth and steady dividends on a month-to-month basis. Within a short period of time, I expect that this account is going to get me to the goal of $20,000, which is the goal for this fund, is to be able to get it to $20,000 dollars. That goal is one that I'm actively working on a month-to-month basis. EQT, that one is, as everyone knows, if you've been to my channel before, this is my vacation fund, and it's currently sitting at shy of $4,000. Last week, it actually reached the goal of $4,000, but again, as the market keeps going up and down, it currently sits at just a shy of $4,000. And you'll see for this one, I'm up 500 and something dollars. I think that's fairly reasonable. I'm up 16% on that one. XEI. XEI is another dividend ETF. I currently owed $10,000 and 642 in here is the value of this. And you'll see again, I'm up roughly 3% for this one as well. I want to continue to grow this over time. And again, this is another emergency savings fund. XEQT. XEQT is sitting at 5,513.66. This is probably the longest one I've been investing in. I continue to put more money into this one on a month-to-month basis. And yeah, as you can see, I'm currently sitting at 545.57, which I think is fairly reasonable, right? And then you have XGrow. My XGrow is currently sitting at 1,142. I'm up 138.91 on that one. ZEG. This one is another new one to this portfolio. It's currently a bond ETF that holds high yield Canadian bonds. At the end of the month, I expect to be receiving dividends for this as well. So, I'm quite excited about some of these changes. ZDV, again, I'm up shy of $30 on this one. ZEQT, I'm up 16.01 on that one. And then the last one, ZGrow, I'm up 361.01 on this one as well. And as you can see, for the most part, most of my ETFs are doing fairly well, with a few exception that I'm currently down on, PFZ.UN, and then the bond one, right? The bond one, again, is fairly new, so my expectation for that one is not super high, right? So over time, this portfolio is hopefully going to grow. I'm being a bit more aggressive with this investment strategy than I have been in the past. And as you can see, if we're looking at day over day, it's saying that I'm actually down roughly almost $2, right? $1.66, which, it is what it is, right? Like when you're investing in a very roller coaster of a market, you see the ups and you see the down, right? There was a point within the last week or so where the market was down so much that a lot of people were fearful and were selling their stocks and selling their shares. But as an investor, when you're investing for the long term or investing for a purpose, you know what your goal is. You're not just going to be deterred by the fluctuations that we often see in the market. Like the expectation is that the market comes with volatility. And that volatility is what gives rise to many of the gains that we as investors enjoy, right? Without any of that, then there wouldn't be any excitement or sort of motivation for people to invest, shall I say? So that's my TFSA. Now let's take a look at my other account. You'll see that in my cash grocery money, there's nothing in there. I no longer keep my grocery money with XEQT, with Wealthsimple, sorry, with Wealthsimple, because I just don't find that there's any value here anymore, right? Like this product used to be one of the best in Canada, and at the moment it's becoming one of the not so great options that Wealthsimple has. Right, they no longer provide you with a monthly cash back that they used to offer you in this product. That's a major that's a major issue, right? Because that's an incentive that allowed me to keep my money here for a very long time, right? So that's no longer there. So I've withdrawn my money from here. I have a little bit of money here, like paycheck. At the on Friday I got paid, and that's sitting here, and then my bills come out of here. So those are basically the only money that's sitting in this account, nothing else. I don't plan on putting any more money into this account, unless I'm gonna keep this account open unless something change. Expect me not to continue to invest or put any money into this account. They're just gonna be a placeholder until Wealthsimple gets its act together and decide that they're gonna bring back the cash back that we've enjoyed for a very long time. I do understand that they are trying to push their credit card, but unfortunately it's not suitable for everyone, right? Not everyone is able to get their credit card, right? It's not a product that meets everyone's needs. They need to continue to offer something to people for them to owe their money in this account. There's absolutely no incentive at this point. So Neo Financial is offering me better interest rates, so I'm not going to keep my money here. Now, enough of that. RRSP. My RRSP is currently sitting at 10,571. Again, there's really nothing changed here. If you've seen my previous video, you'll see that this is still what I've invested in. I have not added any money to any of this. It is just pure growth from what I've invested initially. There's nothing new. You'll see that on this one I'm up 42, on this one I'm up 50%. So those are pure growth. And yeah, that is my Wealthsimple portfolio, guys. And let me know what your thoughts is. Is there something that you think I should have done differently? Is there something you think I shouldn't have done? I'm really quite curious as to what you guys are doing with your own portfolio and what you would suggest I do as the yield on interest rates come down. At a glance, I do want to show you some of them goal for this portfolio at a glance, so you can perhaps get a holistic understanding of why I made the changes that I made. So I will show you that now. Okay, they're gonna let me do that. There we go. Here we go. Yes, there we go. Okay, so as I said earlier, VDY is my long-term emergency savings fund. ZDZ is my property tax. CSAV is my emergency grocery. PLZ.US. N is my business fund. VEQT is my vacation fund. XEI is my emergency housing savings. XEQT is my long-term emergency savings fund. XGROW is my emergency grocery fund. ZEG is my 1 month emergency savings. ZDV is a short-term condo repair. ZEQT is my 1 month emergency savings again. And then ZGROW is emergency housing savings. So, that is now the overview of the changes that have taken place. My rationale, as I've explained, is because of the volatility that we're seeing in the stock market. I think investing in dividends is one that straddled the line of having more of my money in the markets working for me and without taking undue risk, right? Is the way I would put it, right? I'm still wanting to take part in some of the growth that the market does offer, without really, being as risky as, perhaps investing in things like XEQT. And yeah, that is basically the information I wanted to bring you in today's video. Let me know let me know what your thoughts are on some of the things I've done in my portfolio. I'm really quite curious as to what you're doing with your portfolio as interest rates come down and as Bank of Canada decides that it's time to shift towards reducing interest rates and becoming a bit more hawkish in terms of its policy. I'd love to hear from you down in the comment section below. And thank you so much for watching my video today. I look forward to seeing you in my next video. Take care.